Hi there, welcome. My name is Christina Mackay and I am the founder of INN. INN is designed to bring together investors and entrepreneurs. Today I want to touch on your business model. So we're talking about when you come to investors, when you want their investment, they're going to ask about your business model. So what should you include? And we're going to touch on 5 aspects. First is the technology, the service, the product you're actually supplying. Secondly is the protectability of that product. Thirdly is the value that you bring. Fourthly is your financial model. And finally, your scalability and exit. So let's get straight into your technology, your product or service, and your protectability. I'm going to do this one together. So firstly, with your product, your service, your technology, what makes it special? How is it different to what's already out there? What's the value you bring? And then in terms of what your product, service, and technology is it protectable? So outline your intellectual property for your investors. Most investors I speak to, one of their top 5 things they're after is strong IP, strong intellectual property. And then is your IP protected? Is it protected with patents or copyright or something else? Now, protectability isn't a deal breaker. It's certainly preferred, of course it's preferred because you don't want to be copied, but really show how that your product or service is sophisticated, that it's different from others, and prove why it'd be difficult to copy by a competitor. So why it's really going to be unique to you. Because if you're saying, invest in me, I've got a brilliant product, if somebody can copy you tomorrow and do it faster and better, then your business isn't going to succeed. So prove why it's going to be a success and why you can protect it. Next up, we have the value. So what value do you bring to the customers? So how are you different? How do you really provide that unique selling point? And then where do you sit on the value chain? So this means what partners do you need to work with? What suppliers do you need to work with? And can you spread your reach across that value chain? And finally, there's a little saying which goes, are you the morphine or the aspirin? You want to be the morphine. If someone takes morphine, it's because they're desperate for it. They need it. They're going to want it. Whereas aspirin, they can muddle through. They can get by without it. So don't be a nice to have. Be something that really solves a problem. Make sure you're meeting those customer needs. Prove your value. Next up, we have revenue model. And I'm also just going to explain how revenue model differs from your financial model, because some people think they're the same. So in terms of your revenue model, this is all about how are you going to make money? So firstly, who are you going to take money from? Is it from your customers, or perhaps it's from advertisers or suppliers or sponsors or something else? So think about who you're getting your money from. Think about how much you're getting paid, so what's the price? And then think about your costs, so how much does it cost you to meet your customers' needs. And that's not just the raw materials, of course, it's any fixed cost you have, it's any development cost that there were, so really think through the cost base. And then of course, how much margin you're making. Your investors want to know, are they going to get paid dividends? How much is your company going to be worth in the future? So really show that strong revenue and those decent margins. So then how does that differ from your financial model? Well, your financial model, I would describe as a bit more technical. This is more around when will you break even? What's your cash flow forecast? What's your profit and loss account? What's your balance sheet? So it's more of those sort of accounting terms. But it's very important because you need that to understand when you'll need a next round of investment. What's your burn rate? So burn rate is how quickly you burn through the investment money. Also, what's your monthly rate of return and what's your average rate of return? I've defined those terms below in the comments, but really important that you're understanding those and you're able to produce those for your investors and project them for your investors. Next up, we have scalability and exit. This is so important, and so often I see entrepreneurs forgetting about this when they're pitching to investors. They're just focusing on, please give me the investment now because I've got an amazing product and we're going to grow. But investors are thinking, okay, well, when will I get my money back and how much money I'll get back? It's probably the biggest question they have. Otherwise, they wouldn't be doing this. They're not just doing it because they're kind-hearted people. They're doing it because they want a return. So really think about how you're going to scale. So is your product or service underpinned with technology that can help it scale? If it's just a people business, it makes it hard to scale. But talking about people, you still need a team. So how are you going to scale your team? Particularly if you're going internationally. So if you can take your company global, which again will be what investors probably look for, then how can you scale your team effectively? And then in terms of exit, what do you plan to do? Are you going to sell your company? If so, how much do you think you're going to sell your company for? Have you thought through who might buy your company? And if you have, what that company has been spending on previous acquisitions and why they've been buying those particular small businesses. So thinking this through in advance will really help you win over your investors. It will show that you're thinking long term. It will show that you're thinking practically. That said, be honest. If you don't intend to get an exit early, then you might want to take your company public. Have that conversation, explain why you would do that and the benefits it would bring to the investor and the opportunity for the investor to step out and cash in at that moment. Or you might want an evergreen company. You might think, no, I absolutely love what I do and I just want to grow it and grow it and grow it and then hand it over to a successor one day. That's okay too, but make sure you've explained why you would do that, how you grow your company so that it produces strong dividends, so that the investor still gets very strong return on their investment and strong benefits. You're constantly winning them over, so always put yourself in their shoes and think about what they need to hear and show that you've thought it through, you've done the analysis, and you've got the evidence for them. So that was a very brief overview on your business model. I'm happy to tell you more, so please do contact me, get in touch and join INN. There is something called the Business Model Canvas, and I think this could be a really good exercise for you to work through, for you to think through all the different elements in terms of your business model. So this covers things like key partners and suppliers, key actions you're going to need to take, key resources, your customer segments, your channels and your value proposition and more. It covers a lot, so that can be really helpful, and I've got the Business Model Canvas on INN for you if you'd like to have a look. Thank you so much. Join INN, and any questions do ask. Bye.